Hi, it's Carrie here from Spotlight, and today I'm just going to do a brief video on what the main reconciliations in the accounts that you need to complete are. Now, if you pay someone to do your bookkeeping, they should be doing it for you. But if you do your own bookkeeping or you're sending accounts ready for us to prepare your year-end accounts, this is how we would expect your zero being submitted. I'm also going to do a brief demonstration of why it's important to keep on top of your reconciliations. So, reconciliation is an accounting term, but what it basically means is that you're checking the balances in your account agrees to other documentation. So we're going to take the bank account, and this is the reconciliation screen that you should be familiar with. The first check, which we recommend doing weekly, is that your statement balance as per zero, so that's the transactions that are feeding in from your bank into zero, agree to your physical bank. So if they're different, there's obviously transactions missing in your accounts. The second one is to make sure there are no reconciling items. All these need to be posted in your account. So in this case, if the Smart Agency payment hasn't been posted, you could be showing £4,500 more profit than the business has actually made. The second check is scanning through your age receivables report. Now, your age receivables are the invoices that your customers haven't paid you for. And for example, in this case with the city limousines, you know, some of the debt is going to 3 months old now. So has that been paid and not processed correctly in zero? Or do you need to chase the customer for that money? The third check is your age payables report. So this shows you all the money you owe to your suppliers. Again, once a month when you've reconciled your bank, it's sanity checking that these amounts are genuinely outstanding. If they're not, you need to correct it. If, for example, Swanston Security sends you a supplier statement, best practice is to check that statement to what you've got outstanding, and where there's any differences, post them or make the relevant adjustments to make them agree. So just for an example as why it's important to do your reconciliations on a monthly or weekly basis. If, for example, we take this central copiers as that's maybe an invoice that's been posted twice, and these amounts need reconciling. If we look at the profit and loss account for the month now, it's showing us 8,398. So a business owner might look and said, gosh, I've had 2 really good months, I might want to pay myself a dividend. Now, if I then reconcile these amounts, so I'm just going to post them as an example. Okay. And then we are going to remove the duplicated central copiers invoice. So we're just going to avoid this bill. Our profit and loss account is currently 8,398. If I then update it for those adjustments we've made, the profit is actually 4,648. So you can see by not having those transactions posted correctly in the accounts, you're not making your decisions on accurate data. And again, if you haven't made those reconciliations in your accounting data before it's sent over to us to prepare year-end accounts, we're not preparing accounts on accurate data. I hope this helps, and I hope this demonstrates the fact that you need to make sure everything's posted in order for us to prepare your accounts. Also, from a business owner's point of view, you need to make sure everything's reconciled and matched so that you're making decisions on actual financial data that's accurate and you don't end up in trouble further down the line. I hope that helps. Thanks.